beautiful day here in the Teton Valley. All right, let's do it. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I got out of Shopify today, and I'm swinging a little bit of this Unity, symbol U. It's the only changes in here. Everything else is the same. Okay, so I kind of got what I was looking for today. I definitely got really what I was looking for from the market. Sort of maybe a little bit with some of the positions I was looking for. Not great, but let's take a look at it. So what I was looking for from the market today was really more of a digestion day. What we discussed in the morning meeting today was that we're not so extended to the upside that we can't go. Coming into today, I think we had like $4 to $5 of extension in the market from the ADMA on the daily chart for the SPYs. So definitely not so extended that we can't continue. But at the same time, even as that we're not so extended that we can't continue, we're a little bit extended. We had 4, green daily candles here in a row, so we're coming into day 5, and that's as we're approaching a more difficult area. SPY 400 also is, I think that's an important psychological number, despite the amount of times that we traded through 400 back here in November and December. I do think it kind of acted as very broad resistance, even if there were some kind of events that enabled us to get above. Every time we got above $400 in the SPYs in November and December, the market sunk it back down. And even if you don't think SPY 400 is like exact resistance, you're looking at more like the SPY 410, which is clear and obvious resistance. It's certainly the midpoint or so of a broader consolidation. Price congestion, market always has a little bit more difficulty flowing through areas of price congestion. So my thought process for today in the morning meeting was really kind of looking for a consolidation, and a consolidation day or two would actually be a little bit more bullish for the market. I think we have PPI tomorrow that could shake things up, but that helps satisfy some of the overbought conditions, even if we're not too overbought, that we're actually dealing with. Can actually help to set you up with a bullish pattern for a next level breakout. It's something you want to see if you're a bull as well. I did think that the risk was to the upside still. So again, biggest thing I'm looking for is a consolidation day, but if I got to choose higher or lower, I thought that there was a little bit of a higher probability of a move to the upside versus the downside. And I think that Bill K's 0 DTE chart that he posts in the morning meeting also was an extra layer of probability that helped kind of put that together. Just with some, I guess, a little bit of buying, a little bit above, but for the most part, the market was looking sticky in this area with maybe a little bit of risk to the upside. So I pretty much got exactly what I wanted. I got consolidation day from the market, but specifically I wanted a consolidation day in the market with the NASDAQ being relatively strong. We typically want the IWM to lead. The IWM here has really led higher for the last 4 days. It's excellent. It's what you want to see. But between SPYs, Qs, Russell, the Russell was the most extended. So I'm not that worried about SPY extension, about Q extension as far as continuation goes. A little bit worried about IWM being as extended as it is as it approaches 188. 188 is actually the resistance of this upper band. So we had, I'll look at the Qs in a second, we had this broad consolidation for about a month, right? The second half of November, first half of December. And that ended when we got the CPI for November on December 13th, and that was followed the next day by a Fed day on December 14th. It caused us, even though we initially gapped up higher on the CPI, we sold that off. Fed came out, they hit the market a little bit further. We eventually got the technical breakdown of this kind of consolidation pattern. So what I've been looking at is the indices with where they are relative to the levels that were created by that consolidation pattern. So you can see SPYs here at $400 are more or less at like this midpoint, which I do think is some resistance for the SPYs. The Qs are just kind of getting back to the lower end of it, and the IWM is actually testing the upper end of it. So that's, again, just another way where you can very clearly see the outperformance and the relative strength from the Russell. And while broadly that's what I want, I don't want it to get too out of control. There should be some mean reversion over time. So what I really wanted more than anything for the market today, I got, even though it made for a boring trading session, which was broadly a consolidation day. It helps satisfy some of that upside extension, helps allow these moving averages to catch up, but some relative outperformance from the NASDAQ, which also is going to be a little bit of mean reversion, letting that weakest index that we really pay attention to catch up a little bit. Let's take a quick look at the Dow also. Yeah, Dow weakest. Strongest overall, weakest today. This Dow is only like, at least coming into today, I think I read over the weekend, it's only like 5.5% away from all-time highs. When you look at the Dow, you say to yourself, what bear market? You look at tech, and then you say, oh, there's the bear market. But the Dow names have really been performing. But I think it was a good, what's the Dow down on a percentage basis today? Dow's down 1.2%. Not helped by Goldman. Goldman off 6.5% on what was probably the worst earnings report out of any of the major financial companies that reported between Friday and today. But this is fine. A little mean reversion is healthy. A little rest after a big move is healthy. So there's no real concerns yet, and we'll see if the market's able to give some continuation. So the market did more or less what we wanted. Again, you look at the small time frame, a lot of chop here. There was a pop at 10 a.m. on that ECB news that they might only increase by 0.25%. I was concerned that actually wasn't great news for us, though, to be honest. And you could really see that with the dollar rallying at the same time. So I wasn't surprised at all that even though we were making this bullish consolidation, that we failed into SPY 400 on an intraday basis, pulled back very heavily. But we didn't get the downside follow through either. The bulls were still there holding this market up. So once again, at the end of the day, you look at the intraday price action. Even though there's a little bit of excitement between 10 and 11, for the most part, it's just a choppy consolidation day, and there's not too much to write home about. What I wanted to see today, as part of my thesis for NASDAQ outperformance, was a continuation of the growth stock move that we saw from last week. So growth stocks, they really picked up last week. They performed pretty well. Obviously, they're all destroyed on a relative basis. But I'm looking at Bitcoin, gapping up as big as it was this morning. I'm like, okay, maybe the animal spirits want to come in for a little while again, and maybe we could see some continuation of some short squeezes and some growth names. And I feel like I was right and wrong at the same time. Like a lot of these names that we discussed in the morning meeting, I actually didn't bring this one up, but some of you guys brought up like PayPal. PayPal is up. PayPal's green on the day. You got Square. Square here giving a nice move. Square's actually up 5% on the day. That's with a really nice inside and up breakout. You had a garbage stock like Affirm. Look at this move in Affirm here. Again, it's off this $9 low up to 14. That's a big move, but it was just at 14, in December. So relatively, it's just snapping back to where it was. A few weeks ago. But you could see that there was some general, continuation and growth, but it was not, I think, easy trading to be able to capture the moves. Even if you look at Square's intraday chart, if anybody was looking for this inside and up, this was probably one of the better ones that were out there. I know I was looking at this SI. I traded this SI pretty heavily today. Luckily, I was patient. I didn't chase price. I was looking to go. I wanted to go long versus 1450. While we were doing the morning meeting, this thing was just totally breaking away from any prices that I reasonably wanted to buy. Right here, as we were going into the morning meeting, and then during the morning meeting, just totally ripping. I did not have any interest in chasing $16, let alone $17 off the open. So I was super patient, looking for that 1450s where I wanted to kind of be long. I said I did not want to pay out more than 15.25. I actually got filled a small position on this first tail. Low was 15.21. I had bids at 15.26. Got filled, caught this pop, sold a little bit of it, but I was really very light on that move. And then when it came back down here, it was one of those things where it's like, well, with a real ideal squeeze, it should never be breaking this opening low tail, but the ADMA still didn't catch up to that low, so my rules are still intact where this stock can still work. So when it pulled back into this $15 area and tested this ADMA for the first time, and we actually discussed this trade last week. Generally for like earnings, names is a trade that I really like. SI here is a very volatile mover in this first half hour, so it might not be like the ideal chart as a case study, but I really like this trade generally when you get these big gaps ups or down on an earnings report. When you get that first test of the ADMA and you get that tail, that pivot tail into the ADMA on the 5-minute for the first test, is usually a really good trade, especially when you can combine it with like other daily spots. So the daily spot that I wanted to be long versus was that 1450. The problem with this opening low is that the ADMA didn't catch up, so not the end of the world when it's breaking this opening low and the ADMA didn't catch up, though again ideally it doesn't happen at all. So it was kind of into this area that we got our pivot versus this 1450, and this candle came in that I was getting a lot heavier and looking for my kind of long trade on this. So then this thing just gave fantastic continuation. My plan was to like trade it very actively below like 1550, and then if it was able to get above 1550, I wanted to basically hold everything I still had for a move to 20. I obviously didn't get that, so I sold some stock, covering my risk, making sure that I'm gonna make money in it no matter what. All the way up to 1550, and then everything else I had, I was just 100% going to hold to see if this thing could squeeze to 20 or even the low 20s. It topped out almost as like a equal highs here into $17, and then just totally failed, which was a little bit disappointing. Great initial trade. You probably did not need to be as greedy as I was after that last bit when my risk is covered, but you guys know that's how I roll. Once the risk is covered or more than covered, that's when I'm looking to be greedy and capture big moves. Like I always say, that the big money comes from big moves and big size. And it's not always easy to be able to capture big moves on big size. But when you're able to find a lower risk entry and you're able to more than get your risk covered and still have some, and the stock has some squeeze potential and could get back up to there, why not hold it and see if they squeeze this thing up and kind of let it run off of an earnings report, and especially with Bitcoin being up as much as it was. So that was definitely a big focus for me today, and I traded this thing very heavily. I did not add back at all on this last pullback because I just didn't think it should ever come back. I thought at this point it's going to work or it's going to not. I also didn't trail though. Like I easily could have raised my stop on my position to this low here at 10:30, but I decided I'm not going to trail what I have at least on this small of a time frame. And I'm also not going to sell it. I'm just going to see what I have and totally let it run, but I'm also not going to add back. So traded very actively in here, held all day, and then got stopped out when this pivot. I raised my stop from that 1450 that I was looking at to this low. Got stopped out, and that was it. So I was able to make a few bucks on it, but I also gave back a lot of P&L, which is fine, and I would 100% do exactly what I did again tomorrow. What else? Unity. When that news came out about the layoffs, I built into a little bit of a position around this 3140, just another growth stock. I'm actually surprised, and I remember looking at it and being surprised that it wasn't higher to begin with, because I couldn't tell you exactly what Unity does, but it does something related to metaverse type of stuff. And Roblox was just up massive on its news this morning. Obviously, that's a metaverse play. So I was surprised that this Unity wasn't higher to begin with. But I was able to build into a little bit of a position, somewhere in this 3130-ish, 3140 range or so, and then was able to kind of capture that move and put a few bucks in my pocket there as well. But for the most part, I feel like at the end of the day, a lot of the growth stuff, and you can even just look at ARK that I was looking at, kind of worked and closed well and things like that. But the intraday action on a lot of the execution was not necessarily easy with everything. But I still was able to put a few dollars in my pocket at the end of the day today. And I think that's pretty much all I got. So again, not an exciting day. There were a few trades out there that worked. Oh, here's a perfect example actually of an idea we had in the morning meeting. that at the end of the day worked really well, but the execution of it was just so hard. We're looking at CrowdStrike long through $100. They had a little bit of news on an executive shakeup. So through this kind of resistance level that it's kind of created within this downtrend to see if it could turn up and be able to give a move. I'm not surprised at all here at the end of the day to be looking at CrowdStrike at $105. But as far as the intraday execution, this is so hard here. Like being able to get this stock in this $100 area with what this 5-minute chart looks like, it's so hard. If you're buying this thing off the open versus an opening lower versus $100, you're getting stopped out. If you're buying this hammer low here, fine. I would argue it never should have been down there though. What's this thing doing this much below $100, even kind of creating this hammer? It's not that extended where I love it for an extension trade. It doesn't really have perfect volume confirmation for this hammer for a long. You could try it there, but it's just very hard. And then if you wanted to buy it back through 100, the level feels sloppy at that point. You got to give it to lows. It becomes not like a great risk reward at that point. So like trade ends up going to 105 plus. It's exactly what I was looking for when I brought the idea up in the morning meeting. The trade just, the execution of the trade was just extremely difficult. How did like this AY end up doing? Yeah, we talked about this AY. I didn't trade it, but we talked about it in the morning meeting today as a potential trade. Looks like they rolled this thing over a little bit in the afternoon, but this might have been a nice intraday trade if anybody did pay attention to it. I'm just looking at some of my ideas from the morning meeting. What does WBD do? Nothing. Okay, cool. Yeah, so that's pretty much all I got. Again, if you were disciplined today and really focused on the right names, I think you could have made a few. Oh, and Tesla's the other one I should talk about. I'm so annoyed at myself. I've got this Tesla on my list for this break of 123 for a move to the low 130s. I've mentioned it probably in 5 different morning meetings, and I totally forgot about it this morning. Totally forgot about it. Didn't look at it with my own research. Didn't look at it in the morning meeting, and this thing finally, when I totally forget about it, worked perfectly. We did have a great intraday call on this. I don't know if anybody caught it, but gaps up above that 123 level that we've been looking at, consolidates the gap perfectly. I love this pattern. ADMA catches up to the lows here just as this inside 5 is coming in. You take the inside 5 and up in a relatively strong name as the ADMA catches up. It's a great intraday trade for kind of continuation. And it got up to what I was saying was my target, even somewhere back here at lows, which is these low 130s. Can it continue from here? I'm seeing cold smokes comment out of the corner of my eye. Absolutely, it can continue from here. And it could certainly give a day 2 or a day 3 off of this. Well, at some point, we'll probably need some backing and filling. But really, this thing just consolidated here off of lows for 4 days in a row, and it's just a day 1. So even though it got back to what my target had been, I think that not liquidating your entire position into your target, which is usually what I recommend doing, and looking for a little bit of a bigger move if you got stock into 140 to 150 at this point, I do think is reasonable for a bounce back. I think you hold some stock for that move. But obviously make sure you're doing it from the position of a win-win type of situation. And once again, it looks like they bought up that Tesla price cut news. They hit it down initially on Friday when they announced it for the United States. It was the exact same thing that happened when they did it with China. They hit it down initially and then they caught it a bid. I get a kick out of the people who, I saw this on social media over the weekend in the United States, and we also had seen this in China where people were protesting at the Tesla plant in China, and now you got all these Tesla people who are just super pissed. And I guess I would be annoyed myself too if I bought the car a week ago and then a week later, they announced a really big cut and I could have saved myself $12,000 or whatever it is. I would be annoyed as well. But I mean, if you were gonna buy it at that price, you bought it at that price. It just kind of is what it is. You can't be mad that they discounted it after you bought it. It just sucks for you, I guess, that you didn't wait for a couple of days. But they bought that news up in a pretty big way. And as much as I want to take anything that Kathy Wood says with a massive grain of salt, because she says some asinine stuff, the things that she's saying about how exactly Eddie here saying it's like buying a computer it could go down 30% the next day. The technology on this stuff improves, and if the technology is able to improve and become cheaper over time, then that could be what happens. It's similar to TVs and computers. Anybody remember when these, big flat screen TVs first came out, how expensive they were then versus now? Is anybody upset that they spent, I don't know, a few $1,000 on a TV back in the day when you were super cool and had the first one, versus you could get that same TV for like a couple $100 now? It's just how technology improves in certain areas. So that's all I got. Happy to, they'll get over it. Happy to take a look at any questions or anything that you guys have for today, because I don't have too much. That UAL report, holy cow. We'll see how this thing's able to, I'm curious. I'm really curious how this UAL performs tomorrow, because those guiding EPS 50 cents to $1 with estimates of 22 cents, that's a massive beat. But I'm also looking at a stock that has gone vertical from $38 to $52 over, a handful of days into that move. Really curious to see how this UAL holds that move given this extension, but coupled with a massive beat. Sometimes a big beat is not enough when you've had a really big move in. And it's almost the opposite of what we've been talking about with this earnings season about, expectations being so low and some stocks being so beaten up that maybe if they can just meet expectations, those stocks will go higher. This is like the opposite, where stock has had such a big move into this report, and they absolutely crushed guidance. Be really curious to see how this thing trades tomorrow. I probably won't trade it because of the extension, but really curious about it. I probably won't trade it tomorrow because it's super extended, but the news is also really positive. So I don't want to fight that battle. It's not a battle that I want to partake in. Mike Reed wants a video of my backyard ski jump. I'm still building it. I built like the base part of it. It's probably like 17 feet high. And I got to build out the jump part. I got to get out there and move some snow around. From Sue, could you please explain how you manage your stop losses in your swing trades that have originated from a day trade? Sure. So if I'm committing to keeping a position overnight in the way that you're describing, I had a great, and this is how I recommend people do swing trades, by the way. The way I really recommend that people do swing trades is you're not trading the daily chart. It's not, I don't know, just typing up a random stock. It's not, let me buy Apple because I think the chart looks good at 135, and I'm going to give it all the way down to a daily stop loss of, 131.44 or whatever. The way that I like to do it, the way I recommend it, the way that I think that you can get the maximum, risk-reward benefit of the situation that you're trying to put yourself in is to look for intraday risk, so basically starting as a day trade, and then if you get a really good close in your favor, then looking to swing that stock from a win-win situation. And that's where I like to implement, what I call the 1% rule, even though it's a guideline and even though 1% is probably not always appropriate, especially in a very volatile market like we've experienced, and depends on the stock. But in other words, I started with this day trade, I'm 2% in the money, I'm more than 1% of the money, that's why it's the 1% rule, and I'm gonna, swing a percentage of my original position just to see what it can do. That's what I'm doing with Unity, by the way. Put this trade on in Unity. My price is like 31, 30 or something like that. I'm closing $1 in the money. It's pretty good on a percentage basis. I think this daily chart looks pretty good here. This kind of bullish consolidation as it's rounding up. Another name here that's kind of formed a really big base, really big multi-month base. Maybe this thing is able to work its way back up to $40 over time if the market supports these names a little bit. So my thought process is, hey, I took a day trade here, I booked a bunch of profit, I still have some into the close, why don't I keep this overnight? If the whole thing gaps down $1 tomorrow, I'll get back some open profit and I'll still make money on it. But if they gap the thing up $1 and it continues an uptrend and it breaks out and it's at 40, I'm getting an overwhelming reward for the initial risk that I put on, and that's a great way to, I think, to be able to make money. So when I commit to then holding that position overnight, I keep the original stop loss. So my stop loss that I'm planning on using for Unity is the low of the news event, right? That's how I always trade these things. So the low of the 12.15 bar here is 31.13. So that's kind of what I'm planning on using as my stop loss. I'm keeping that stop loss. That I'm not like all of a sudden, because I'm keeping it overnight, going to use like this pivot low from 2 days ago. Even if that's technically correct to use the pivot low from 2 days ago, that's not what my original trade was based on. My original trade was based on, the news comes out, there's a bunch of volatility. I personally interpreted that news positive, in a positive fashion, so I got involved in it looking to see if they could ramp this thing back up to here. It actually overshot it. So I'm not going to use the daily chart stop loss now. I'm going to keep the original stop loss. But as far as moving forward, like trailing it as an example, because I want to, if this thing goes to 35, I don't want to give it all the way back to 31.15. But I don't want to get out of 35 either, because maybe I'm looking at a move to 42. And if I can get a move to 42, maybe I'm looking at a move to 52. I don't know. But that's the idea for reward maximization. So I'm going to keep that stop loss in at 31.14 or whatever it is, stop loss in, until the stock lets me raise the stop based on my trailing rules on the daily chart. So basically I keep the original stop loss in, but now I'm going to trail on the daily. Sometimes I even trail on the weekly. Most of the time it's on the daily. So if we get a breakout up to $35, and then it pulls back to 32.50 and gives me a higher low, and then breaks above the $35 previous pivot high, then I raise my stop to 32.50. So basically implementing the exact same trailing rules that I use on a 5 or 15 minute chart, but on a daily chart. And then we'll just, see what it can do. So thanks for the question, Sue. I hope that helps. Let me know if you have any follow-up questions. From Jack, got into XLE at 9:34. Okay, I like it. Got into XLE at 9:34 when the 1 minute EDMA caught up and stopped at the low of the last 1 minute bar. I covered risk, but I did not get to risk stop to make profit. I don't know what that means. Covered risk, but did not get to risk stop to make profit. I don't understand what that means. If I had waited for a 5 minute ADMA to catch up, I would not have had confirmation. I'm curious to know what you mean by confirmation. In your opinion, is using 1 minute charts too noisy? Or can that work more often if the stop is correctly? I do not use 1 minute charts. I have never used a 1 minute chart my entire career. I can't even look at a 1 minute chart. I don't even have access to a 1 minute chart. I have a 2 minute chart. I almost never, I don't want to say never, because if Paul's listening, will get upset with me. I almost never even look at a 2 minute chart. Smallest time frame I'm generally ever going to be utilizing is a 5 minute. I think that the 1 minute chart is just way too noisy. Sometimes I'll look at it too just to get a piece of information, or again if it's a special circumstance. But I think the 1 minute chart's way too noisy. I mean, I don't understand how you didn't capture this entire move, to be totally honest. We talked about XLE this morning. We said broadly if XLE is above $88, and it is, you can lean to the long side of the ETF and to the stocks that are in the ETF. So we mentioned Exxon, Chevron, Apache, Oxy on the morning meeting. XLE is an inside day here, and it's above 88, so we're looking for continuation in XLE above $90.16. So the daily trigger is really $90.17. Stock ETF opens at 9.16, puts in a quick low at 9.14. I mean, you could have bought this versus the open and low for 3 cents risk. I probably would give it a little bit more space than that. I'd probably be giving it down to like 90 or so, like the gap fill or even this little pivot low if I took that buy. But from a pure momentum trade, you could go long versus 19. You could go long through 90.17 versus 90.13 as a momentum trade based on the daily chart for continuation. But you waited for 4 minutes, so you're buying somewhere within this bar. I don't know what your price is, but probably closer to the closing because it's 9.34. So you got a price at 90.40. Your only stop loss if you're buying around 90.40, or a little bit higher, a little bit lower, is the low of the day. That's the only appropriate stop loss at that price, as far as I'm concerned. So you're in from 90.40. Your stop's at the low of the day. You're taking, whatever it is, 27 cents risk. You get your move. You get your risk covered. Looks like pretty easily. And then this thing's looking great. I mean, inside 5 and up, taking off. It's a bit extended here, so I have a technical pullback. Technical pullback is definitely deeper than you want it to. My stop is still here. My risk is covered. Hopefully I sold even more into this extension, so I'm going to make money no matter what. I never would have even raised my stop in this thing because it doesn't give a pivot that leads to new highs. My stop would still be here, and I eventually would get stopped out at 11:15 when this opening low breaks. And worst case scenario, if I'm super greedy and break even in the trade, best case scenario, I put a few dollars in my pocket on a trade that technically fails, but I'm game planning in such a way where I'm going to make money no matter what. So that's how I would have traded a Jack. I do always think it's worth saying, as much as I really dislike 1 minute charts, that my way is not the only way by any means. There's many ways to make money in the market. So if you do something that's different from me that makes you money, by all means, please do it. But I've never in my career seen someone who's been like a consistently profitable, super successful trader who like exclusively trades off 1 minute charts. Which isn't to say you couldn't be the first, but I think the odds are stacked against you. So I hope that helps. Looking through here, from Cameron, can you talk about how you found your edge? Do you learn from a mentor, back test, trial and error, etc.? Sure. So, oh boy, it's been a long journey. It's been a long journey with a lot of changes over the years, Cameron. A lot of changes, a lot of adjustments, a lot of missteps, a lot of one step back in order to take 2 steps forward. Sometimes even a few steps back to take a bunch of steps forward. There's been a lot of that over the years. The biggest thing has been the evolving marketplace and making sure that I evolve with it. I think that's also one of the most difficult things about having longevity in a trading career. And I know that a few of you guys that I've chatted to recently who maybe had success, in 2020 or 2021 and then struggled a little bit more in 2022 or 2023 can certainly attest to now having to deal with yourself about how a changing marketplace can be really difficult. I have learned from a lot of different resources over the years, and I have a lot of people that I should be thankful towards. At the same time as that, to be totally honest, I would have to give myself the first and foremost credit towards it. Because whereas I definitely had people who showed me a trade along the way or have given me changes or adjustments or helped me out with certain things, at the end of the day it always really kind of came back down to me, to just countless hours spent focusing on game plans and rules and brainstorming and staring at Excel spreadsheets and playing with numbers and coming up with strategies and different thought processes. That's really what it's kind of come down to. Again, early on in my career, there were a couple people who showed me a few specific strategies, who told me I should be organized in my trading, who told me I need to focus on risk management and money management, a lot of the key stuff. But I've also always been a believer, and this is what I tell you guys, that you should learn from as many people and as many resources as you physically possibly can be. I should not be, for a lot of you guys, I probably will act as like the #1 resource for your trading education. I should not be the only one. If I am the only resource for your trading education, you're doing yourself a disservice and you're hindering your ability to become successful. I've never seen 2 successful traders who are successful in exactly the same way as one another. So, no offense to anybody, no one's going to be able to do exactly what I do. As much as I try to tell everybody, and I do my real best to communicate my thought process, where I'm buying, where I'm selling, where my stop loss is, how I'm thinking about risk, I really do my absolute best, and it's difficult sometimes, believe me, to communicate everything I'm doing. You can't just follow me, and you can't exclusively learn from me. I learned from so many people. So get your hands on any resources that you can get your hands on. I know that there's been a link that's gone around or something that's got like access to a bunch of books in it or PDFs. Like I remember I had access to a similar link when I was early on in my career, and I just started reading every single one of them, one by one by one. I remember reading a book about tape reading that was from like the 1950s or something that had absolutely no bearing on today's market at all whatsoever. And my thought process was, if I can just get one little tidbit of information out of this book that will, positively impact my trading, it'll all be worth it. So, again, a lot of different people, a lot of different resources, a lot of different books, a lot of different blogs. Remember when blogs used to be a thing? Nowadays, podcasts, stuff like that. So get your hands on every resource that you can get your hand on. But at the end of the day, you got to be able to put your process together in a way that makes sense to you. So a lot of the trial and error that you're talking about. And again, a lot of after hours thinking and brainstorming about things like game plans and strategies and stuff like that I can implement. If anything, I would credit any success that I've had significantly more to the work that I've done outside of the hours of 9:30 to 4 than during the hours of 9:30 to 4. I've never back tested anything, to answer that part of your question. I don't back test at all. I haven't back tested. And honestly, even when I speak to like algo guys and quant guys, the best ones I ever speak to also don't back test. They forward test, meaning that they are testing based on real-time information and real-time data as it comes into play. And I feel like that's kind of what I do also, even though I'm not trading with robots. So yeah, I mean, it's just been a really long process, and there's been lots of changes and adjustments. There's been periods of times in my career where my strategy's done a complete backflip from what it was, and that's usually because the market environment changed. And that's, again, I know I said that already, I'm probably rambling. The hardest part about this business initially is risk management and money management. That's the key, especially when you're a new trader, is making sure that your risk management and your money management is solid. It's the number one reason why people fail. But the hardest part about this business for someone who's established or someone who's previously been successful is the market environment adjusting and strategies that you've used not working in the same way. That's very, very difficult to deal with for a lot of reasons, especially psychologically. Because it's like, wow, you worked so hard, you developed these strategies, they're working, they're paying you consistently, and I know how this works in your brain because I did the exact same thing in my brain back in 2010, 11, beginning of 2012. I had some strategies that paid me very consistently that ended up completely disappearing from the marketplace. And I remember, in probably like 2011, just extrapolating these numbers in my brain of like, oh my God, if I can make this much money on a daily basis right now, this is what I want to size up to, and then I'm going to be making like so much money, and then all of a sudden the strategies just didn't work anymore. And I had to completely kind of reinvent myself again. So I've had to do that a couple of times. So yeah, it's a process. It's a process that requires a lot of hard work. The root of it is always, the root of any successful trader is always going to be the same. It's risk, reward, and probability of success, which heavily includes money management and risk management. So I don't care what your approach is. I don't care if you're an HFT robot or you're Warren Buffett. It's risk, reward, and probability of success. That's what the business comes down to. And then it's all heavily about money management and risk management. So that's your starting basis. And I do think that, as much as we love to talk about technicals, that's what we talk about every day, right? Because that's where our trading setups are coming from. I don't think that they're the most important thing. I think the most important thing is the math. It's the math. It's the money. It's all about the math. It's all about the numbers. You can, obviously you want to learn to use your technicals and your charts, but you can almost get more sometimes out of sitting there with a spreadsheet open and just playing around with game planning numbers than you can trying to learn a bull flag. It really comes down to the math. I think you can be like a mediocre trader and make money consistently if you have good risk management and you really understand the math. Or you could be like an excellent technician and not be able to make money because you don't have a good grip on consistency when it comes to your money management, risk management, and the math. So appreciate the question, Cameron. I love questions like that. So they're great for us to take a step back and think about things. So so yeah, good stuff. Yeah, Moderna ripping on that news also, right? Where's that thing at now? 203. From Rex today, Tesla is inside 5 at 940. Risking $2 is kind of a little too much. How do you project the price move? How do you project the price move would able to cover the risk? Yeah, you can't. I don't think. I mean, you can. You can have an understanding of where a stock should go if it's really going to break out. So like I said, the fact that the stock went to the low 130s does not surprise me. It's the exact same move I've been looking for. So you could ask yourself, like, hey, if I need to buy here and take on $2 worth of risk, and I'm only looking, and I think I get a move to the 130, low 130s, is it worth it? And you might say no. And if you say no, actually, it's actually totally fine. And you decide not to take the trade because you don't think that the risk is appropriate versus the reward potential of the trade in a difficult name, which has been primarily downtrending. So if that's your thought process, then I'm totally fine with that. The flip side of the process is kind of what happened, where it's like, all right, I got to take on this $2 worth of risk, but if it's able to close well in those low 130s, like we were saying before, there's a potential of it being a day one, and maybe we're looking at a move to 140 to 150, and now all of a sudden that risk reward becomes significantly better. But it's a difficult thing. For what I do, as much as we all talk about how important our risk reward ratios are, I'll be honest, I don't really look at it that way too often. I don't know if that's the right thing or not, to be honest. I'm not, like, if I'm looking at Tesla today and I'm looking at this trade, I'm saying to myself, is $2 worth of risk worth it? I really don't think about where I think the stock can go. I'm really not actually thinking about, well, I could get $4 worth of reward potential to 132. And again, I'm just telling you what I do. I'm not. This might not be right, but it's what I do. I just think about, is $2 in Tesla, and I know the name well, something I really want to take on? And if the answer is no, then I don't. And if the answer is yes, because I'm always approaching trades, especially with trend trades, and you could certainly make the argument here that Tesla's not a with trend trade, but especially with trend trades, I'm always approaching it from a reward thought process, and my reward is unlimited. That's how I'm always thinking about it. So that's probably why I don't think about, like, ooh, $2 worth of risk, but if I can only get a move to the 132s, I don't think that the risk reward is worth it. I kind of just know I especially know my stocks. I'm always a little bit wary on trading something brand new, even like that AY or whatever that worked so well that we talked about in the morning meeting today. I'm always a little bit wary about getting involved in an AY. I have no idea what AY is. As I'm doing this afternoon meeting right now, and I don't have it in front of me, I can't tell you the name of the company. I don't even remember the name of the price of the stock. I just remember that it got upgraded this morning, and there was like a breakout or something that I liked in it as a potential trade. So I brought it to you guys as an idea if anybody was looking at it. But I know Tesla well enough to know if I'm getting involved with $2 risk, like, it's like, it's very, in my brain, $2 on Tesla risk here is very borderline appropriate, like very borderline. Like, it's like a little bit more, I would say definitely not. Less than I would say for sure. $2 is tough. And maybe with you, you're like, $2 is way too much, so it's just not what I'm taking. And that's totally fine. Also, you got involved in SI at 950. At 950, when it dropped to 1480 and tailed back up and went long at $15. No, I don't think you got long too early. I don't think you got long too early. Yeah, I don't think you got long too early. I'm just trying to think about game plan at that point. Like, is the right idea just use the stop at that low, or should you be giving yourself some more breathing room? I was giving myself some more breathing room. Pretty sure I bought there with you, but I wanted to give it to that 1450 space initially until I had more confirmation that it was really working its way up. Like, I don't think I raised my stop to this like 1464 until it was above definitely until it was above 14 quarter. Because I remember this high is 15.23. I don't even think that's real. I think the real high was 15.22. 15.23 might have been a through print. Because I remember watching, I was offered at 15.24, and I remember watching 15.22 sell. 15.22 was a refreshing seller. And on the way down on the bar before that, there was a very heavy seller that was driving this thing down. I guess I do incorporate tape reading into my trading sometimes a little bit more than I think. Like, I wasn't convinced. There's a very heavy seller driving this thing down. At one point, he flashed size, like 65,000 shares or something like that on the offer. And then you could just see the refreshing offers kind of pushing this thing down. But this is the area where I want to see if there's going to be enough buying pressure that comes in for that to break. So this, comes down, puts in this low of 1480, which is what you're looking at, off the 80 EMA, begins to work its way higher. I'm watching this very closely, and there was a bunch of out of market dark pool prints that went off at that time, which I thought maybe could have been that end of the seller. So I'm watching this thing very closely to see if that's going to be the end of the seller. And then I saw that heavy seller come in at 15.22. So I had no basis to really think about using that higher stop loss for myself yet. I also understand the pure technical scalp trade of through 15, pivoting off the 80 MA and buying it back through 15 on the way up versus that low. And I can't say it's wrong. I'm just telling you why I didn't do it that way. I'm seeing that seller there. I'm seeing the 15.22 seller come in. They drive it down to a new low, but this is still not the end of the world. It's still above 1450. It still creates a tail kind of into that equilibrium area. And this is actually where I got even heavier. And then when it finally cleared 15.22, I knew the seller was not there anymore. And I was like, okay, now I'm set. There's no way this thing should be able to get back past this low. And if it does, then I'm definitely wrong. So just at that point, I was like, all right, I think I'm going to use this 15.65, 15.64 as my stop loss. And then again, I was really disappointed with what happened after. So, yeah, it's great. It's great, Rex, when you can ask a question about a name that I was also involved in, because I can give you so much more detail about it, because I was in this one with you. And again, I don't think what you did was wrong, but I just explained to you why I did a little bit different. From Zachary, on choppy days, how do you change your half off at 1-to-1 plan? I don't. Are you quicker to take profit than other days? No, I'm not. No, I do. I generally do the same thing. Maybe I'll be a little bit less aggressive on the game plan after the 1-to-1 kick, after the risk is already booked, just to, if there's a higher probability of overall failure, just to kind of take, just be a little bit less greedy. But for the most part, I don't change anything from a game planning perspective on what I trade. I probably just am much more selective on what I trade. If I'm expecting a choppy day, I'm expecting the market's not going to be on my side, I'm just going to be much more selective on what I trade as opposed to actually trading what I trade differently, if that makes sense. So, appreciate the question. Gotcha. Mark here saying, I've been thinking about this quite a bit. I think it's 95% of the work that you put in and 5% of what you learn from others. The percentages might be off, but the point is that it really is up to us to find the edge. Yeah. Look off. I've read. Yeah. Oh, that's that book. Yes. Yeah. Totally agree with Mark. Again, not sure on the percentages. I do really think. I also, as much as I agree that it's more on you than what you are learning from others or whatever. I do also think that having a solid support network, a good team, people that you can ask questions to, share information with, and having multiple learning resources is really important. And it's extremely important, actually, doing it. As much as I would, again, have to primarily credit myself for any success that I've had, I definitely wouldn't be here without others, if that makes sense. If I didn't have those other people, all of those other people that I learned from, and then put it together in the way that makes sense to me, then I wouldn't be here to have the conversation. But it was still more me than others. Yeah, what Mark's saying there, I agree with. Yeah, exactly. Sizing down while you're going through your learning process is also going to be extremely important. Let me just see if I missed anything in the YouTube. Where's the live? What time frame was I using for SI? Like usual, I was combining a daily chart for the idea, and the key level of 1450, combining it with, like in this case, a 5-minute chart, also sometimes a 15-minute chart for the actual execution. So that's a lot of what I do, is combining daily charts to get the idea, to get the thought process, to know the big picture stuff, and then looking for the execution on like 5 and 15. Okay, cool. Looks like I got through everything. Again, slower day today, but you guys had some great questions this afternoon meeting, so those are very much appreciated. Keep those coming. Obviously, want everybody here to be as successful as we possibly can get you. And if you're on the YouTube, give it the thumbs up thing so we can further build that out. I appreciate you guys. Have a fantastic night.